G'day everyone, welcome back to Pete's Investing. Today is March 16, 2023. This is the US crude oil price update. Since our last update, the price did fall down, and on this Fibonacci extension, it did fall down past the 50% level, and we did draw this extension for potential further declines. And where we are today, it's currently resting at the 61% retracement, which is the $68.60 level on this time on a daily chart. Now you'll notice there was a key support line drawn here previously at about the 73 level, $73, but it's fallen well below that and below the $70 level, and currently resting around, as I said, around a 68.30 at the moment, which is the 61% extension on that Fibonacci extension. It did break out of that ascending and descending trend line wedge. That was always going to be an outcome, and based on the daily, you'll notice it's still in a pretty strong downtrend, like was on the 4 hourly, on the CCI 1500, and especially on the 1 hour timeline as well. On the 4 hourly as well, we had drawn this extension likewise on a smaller time frame, and previously it was resting around 100% level, and now it's dropped down and touched the 200%, and it's retraced back to the 178% level, which is around $67.30 if you look at the finer timeline where the bars actually, the open and closes are. So where are we from here? Well, there is a major support being formed at that level at the moment. Hasn't confirmed or finalized, so I'm going to remove that. I'm going to move that to that level there, which is our major support being a new major support being formed. So just that'll be their new potential. If it's going to break below that, it's going to be more shorting to become. Otherwise, we're going to see more of a retrace to the upside. Now, we're not sure how far it's going to go to the upside. All I can suggest is we'll keep an eye on it. I will draw a Fibonacci retracement to give you some outlook on that. So going from that low to that high. So typically what we look at, let me just get rid of that extension for the moment. So typically what we look at around these 50% to 61% would be potential retracement before it takes further declines. And that's going to re-enter back into this wedge formation possibly. Otherwise, again, that's not a target I'm setting. I'm just giving you a potential before any further declines are made. Otherwise, look, it could go anywhere from where it is now. It might rise as far as the 23% or the 38%. I'm not going to predict anything like that. I'm just giving you potential probabilities of where it may retrace back to. So at the moment, we're in that range. Yeah, that's a key support area being formed. So if you're going to be going long, I'd suggest be very careful about going long, because all time frames are in a bearish momentum, and it's unknown yet where exactly it's going to retrace to and potentially further decline. So to understand how to properly trade using the average down approach, reference the links in the description below. Thanks for watching. Subscribe and like, and see you in the next video.